Hey, it's Trader Tim from EminiMind, and I'm doing a trade recap for Thursday, October 6th, 2022. Um, just finished trading here. We're only not even 2 hours into the day, but I want to get a video out running through today and a couple of trades earlier this week. I really haven't had a ton of retracement trades the last 2 weeks, or at least that have really gone for big runners. Had a couple of trades last week, couple of stop outs, and the week before that was pretty quiet. We had the Fed meeting that kind of uh, slowed things down a little bit midweek, but we've had a couple of really nice 15-minute breakouts, and then just finished a trade here off of the halfway back short for a small winner. So I'll run through that as well. Um, going going backwards and then coming back to today, the 15-minute breakout has done really well the last couple of days, and I've sliced and diced that setup, or not so much the setup, but the ways to manage the trade. And I've chatted with other traders about it, and I even had a couple of traders do some bigger I guess back testing with it using some different variations, and we've all come up with the same conclusion. And in the last couple of years, just going through my actual trades, not even the back testing stuff, but just the actual real live trades, and the -4 stop with the 20-point target, and this is on the ES, 4-point stop, 20-point target, still takes the cake. And you just have to be, in order to trade something like this, where you're trading off the first 15-minute bar, you need to be there every day. And that's really the kicker. You're going to have a lot of times where you have strings of, -4, -4, -4, but then those plus 20s show up and they offset those stop outs really, really quickly. And if you can get to multiple contracts, now all of a sudden you can do a few little things like once you get to plus 20, start trailing the 15-minute bars from there. Because the whole premise behind this strategy is catching big moves when there's not a retracement early in the day. And so a lot of times, or the times that the market does move really strong, kind of like we had the last couple of days, those strong up moves rallying into the close, I want to be able to catch that move even though there's not a retracement on the 15-minute really at all on those days. And so that's where this 15-minute breakout comes into play. And so even if you're just doing one contract, I know a lot of people are doing one contract on the mini, trading the 15-minute, and then they're still working with the micros for the retracement trades and trading 2 or 4 contracts over there, because that definitely works better to have multiple contracts when you're trading the ES in most cases. But with a -4 plus 20 15-minute breakout, parameters, you could easily just do that with one contract. But now all of a sudden you get to 2 contracts, and if you get a trade that goes plus 20, you can take that second contract and just trail the 15-minute bars until you're stopped out. Or I mean, you could even go down to a 5-minute chart if you really wanted to, and trail. You get your plus 20 and then start trailing the 5-minute bars. At that point, we're just splitting hairs on how much profit can I get out of the trade. So, if you go, it's 6 one way, half a dozen the other. Or if you just want to take both contracts or all of your contracts off at plus 20, that's fine too. But I looked at a lot of different ways of how can I tighten my stop, how can I trail my stop throughout the trade. Do I want to take a profit at plus 10 on half the position and then plus 20 on half the position and sort of stair step my way out? And no matter how I slice it, that plus 20 -4 seems to give me the best return. So just wanted to share that because we were talking about it on Tuesday. And for those that have been in the live sessions over the last 2 or so years, we've talked about a few different ways that you could reduce your risk, but just coming into it each day knowing, okay, if there's a gap, I'm going to take this setup, and it's either going to be a -4 or a plus 20, and there's no emotion to it, and that's it. And so building that kind of systematic mindset around that strategy is a really healthy approach to building some good trading habits. So we had Monday was a -4, and then Tuesday was a +20. Yesterday went +20. Today, it did go +20. It did fill the gap, so I didn't take it today, but that's 3 days of +20 in a row. And especially in this environment where the volatility is a little bit higher, you're seeing these trades go +20 fairly quickly. So just wanted to touch on that, especially because I've been very light with the retracement trades the last couple of weeks. But let's go through today, and you'll see I've got the high and the low of the first 30 minutes marked, and the first 30 minutes also happen to be the first 15-minute bar here, because the second 15-minute bar was inside. And backing up just slightly, on the daily chart, we are inside yesterday's range. And so with that, and looking at the breadth and the advanced decline line and seeing that they are not, extremely bullish or extremely bearish, like we don't have a 10-to-1 breadth and a 2,000 or a -2,000 on the AD line, that gives more opportunity for some back and forth or for some range bound price action, especially being intraday. And so look at, like the sine wave today is a lot deeper, and we just made a 50% retracement on the day, and that was actually the trade I just took, which I'll get to in a second. But whereas if we go to yesterday, here's the morning session, that 50% retracement occurred 2 hours into the day, and we kind of had a consolidation, the quick break here, which ended up giving the 15-minute setup trigger, and then going down it's 20 points. But then we kind of went sideways over there as well, and then the market kind of shifted, and we turned and headed higher. And so similar to yesterday, one thing I want to touch on is if we break down below the 30-minute low, and then we come back up into the 30-minute range, and we can break through the halfway back of the day, the 61.8, we have a very strong chance of going back to highs of the day. And that's sort of where we're at right now. We haven't broken the 61.8 of the full halfway back, in this case short of the day, but we're kind of between these two 50s, where we have a 50% short and, get rid of this one, a 50% long, and we're sort of right back at the bottom of the 30-minute low. So we have a good chance at this point of trading back up to the 38.11, the highs of the day. And if I'll go to yesterday real quick. I will mark the 30-minute high, 30-minute low, go back to a smaller time frame, and if we zoom in, we can see first 30 minutes we were all inside of that 30-minute range, just by definition. And so here's the low of the first 30 minutes. We spent a little bit of time below in kind of selling territory. We came back up. We hit our head on the bottom of the first 30-minute range. It also happened to be the 50% retracement of the short. And then we spent, 5 minutes or 10 minutes kind of between the 250s after the 50% long touched. But then look what happened after we got into the 30-minute range and broke the 61.8. It was just pow, right to the other end, right to the opposite end of the 30-minute range. And then, up from there. So today, if we end up coming up here in, the next 10 minutes or so, or whenever it happens, but if we get some momentum here and come up through the 61.8, then there's a good chance that we'll come to the top of the 30-minute range. And so knowing that, when we trade below or above the 30-minute range and then we fall back into it, I like to start looking for potential opportunities to take that to the other end of the range. And also with a breadth and advanced decline line that's not extreme, that gives us a better chance of that happening. So backing up to this morning, there was a There was actually a little counter trend long down here with a double bottom. Here's that 30-minute low. Let's see, get rid of this guy and this guy. So this gray line, 77.50, that's the 30-minute low. We had a little double bottom here. It traded super fast, and I wasn't able to get in that one, and that's okay. It was pretty close to the 30-minute low. The one I did take that I actually ended up getting stopped out on is right here, where we had a little double top off the 30-minute low. I drew up the short. It traded, and it actually just shot through the 61.8, and then that did end up rolling over, but I was stopped out before it rolled over. But then going later into the morning, but you can see how that resistance, 30-minute low acting as resistance, and then the move down. And then once we came up to the full halfway back of the day, like so, breadth and advanced decline line, we're still fairly bearish at this point. And so we go forward. I drew up a long as the opposing, like this. So the short had traded, or the short was in process on the 15-minute, the full halfway back for the day. We broke a little swing low. I drew up this short like this, and I took the 86.75.